Hello and welcome to Morning Trade with Moneycontrol. I'm Karunya Rao and I'm here to help you navigate the trading day with actionable trading strategies, sectoral trends and most importantly your queries during the course of the show. So guys, keep commenting on our live feed and we'll have it addressed by our technical analyst. Before bringing our guests on the board, let's see what the global handover looks like. Now, building on Friday's gains, European stocks closed higher on Monday, although Italy's main index was muted amid political uncertainty. Stock 600 gained 0.8%, with basic resources climbing 3% to lead gains as most sectors and major bourses finished in the positive territory. Wall Street, however, ended lower after bank stocks erased earlier gains and Apple shares fell on a report saying that the company plans to slow hiring and spending growth next year. Benchmark indices closed more than 0.6% lower. Stocks in Asia Pacific trade mixed after a positive start to the week. For our own markets, SGX Nifty indicates a weak start. In our What's Trending segment, we get you a sneak peek into HUL's Q1 earnings estimates and the result outlook for the FMCG sector. Also on the show, a closer look at the technicals of IndusInd Bank, Tube Investments and Jubilant Foodworks. Okay, let's get going and talk technicals. Today we have our guest on the show, Raja Venkatraman of NeoTrader, joining us. Good morning, Raja, and thank you for coming on board. Let's talk about the trade setup that we're working with. It's a mixed sort of signals that we're getting from key Asia-Pacific markets. Wall Street, of course, ended lower and tech stocks were the big laggards, followed by what happened in the banking earnings. Europe shut shop in the positive. So what's likely for us? How are things going to pan out today?
Yeah. Good morning, Karunya, and good morning, all the viewers. We are looking at the market as a continued sentiment of mixed bag. Yes, there are some bullish sentiments which keep emerging, but then we have to take cognizance of the fact that the market continues to be under pressure at every rise. It is rising into important resistance zones, it's taking a breather, and then it's going towards the next zone. So what it has done yesterday, right? Yesterday it has reached a significant high, and if it were to cross and retain above, give a nice closing above 16,300, which it has done, but it needs to sustain. And the point is whether it is going to sustain. The challenge continues to remain that at every small news which is emerging from the global cues, we are seeing a reaction and as per technical parlance, a strong Fibonacci resistance level was reached at 16,250. Now it has reached at yesterday's high. Now we are seeing a reaction. But if you take a look at the option data, it clearly suggests that the max pain point is at 16,100, and for the Bank Nifty, it continues to be at 35,000. So I would continue to retain a positive outlook, but then I would be very cautious because the market continues to be in a mixed bag scenario. Now, when you talk about the sectors are doing quite well. Auto continues to remain the strongest sector. So one should look at pullbacks in the auto sector as a very good possibility to buy into. And the IT and metal names are seeing some bounce back because of the sharp declines that they have witnessed. So that one should be more on a sell on rally in the IT and metal names rather than going on the long side. But then auto will be a very good space. And like you mentioned a few minutes ago, FMCG seems to be on a revival mode. So I would be concentrating on the FMCG space as well.
Okay, we will also be concentrating on the FMCG space and we'll talk to you about some of those stocks. But before that, I want to flag off the stocks that are in news and that have reported some corporate developments. I want to flag off an IndusInd Bank first. The board has approved fundraise plans for up to 20,000 crore rupees. This will be via debt securities on a private placement basis. So some fundraise activity that's likely for IndusInd Bank that could keep the stock in focus today. Talk to us about the technicals of an IndusInd. Good recovery seen last 1 month from 770 levels to now at above 850. Do you think that momentum could sustain?
IndusInd Bank has performed, it has been quite lackluster. Yes, there has been a rebound, but then you will see that unless it is able to sustain above 860 zone, it is very difficult. 860 to 880 is a key supply area. So yes, the momentum seems to be on the recovery mode, but then I envisage that around that zone you will experience some supply. So if you are going to initiate a long, it would be only for intraday or a multi-day basis, not on a positional basis.
Okay. Next one I want to flag off is Tube Investments. Its subsidiary TI Clean Mobility has acquired a 65% stake in IPL Tech Electric. The transaction cost is close to 250 crores. So looks like some more investments happening in the clean resources, clean fuel space. But let's talk about the technicals. Tube Investments again has been, been fairly strong in the recent past. But is that strength, likely to take the stock forward from the current levels?
Right. So, Tube Investment has been on the radar for quite some time. It spent some time in consolidation, and on the charts, it's made a nice double bottom. And the strong breakout which we have seen over the last few days looks to be sustaining. What it has formed on the chart is something called as a flag pattern, and I feel that if there is a move above yesterday's high, it could be a very significant move to the upside. So one should consider a target zone of around 2300 to 2400 within the next few weeks, and with a very tight stop loss at around 2000. So you can look to participate in this stock only if it moves above yesterday's high, because above yesterday's high, it would unfold a very strong momentum to the upside.
Okay. The third stock we want to highlight is Jubilant Foodworks. Once again, its subsidiary Jubilant Foodworks Netherlands has raised its stake by 2% and DP Eurasia to now hold 44.75% in the company. Remember that this particular entity, DP Eurasia, where they've risen their stake, is a franchisee of Domino's in Turkey, Russia, Azerbaijan and Georgia. So, in fact, this is, the international markets is something that Jubilant Foodworks has been trying to tap into for several quarters now, and looks like they're on track for that. But let's talk about the stock price after the consolidation phase. Even that has in line with many of the peers from the QSR and consumption space, this one also witnessed some recovery. But the question is, will it meaningfully continue that momentum?
See, once you're talking about the QSR space, it directly ties on to the kind of scenario which is there in the current market environment. So the current market environment continues to remain subdued. So the rub-off effect, what you're expecting of the news on Jubilant Foodworks could be limited, and it is going to experience some headwinds around 580. So I don't expect this stock to surge ahead. So one could use, definitely, the setup seems to be on the positive side. So any dip towards 525 to 510 could be a good zone to look into the stock, but not on a breakout.
Okay. Raja, I request you to stay on with us. We'll just come back to you in a moment. I want to, closely understand what's happening in the FMCG space, the consumption space, and how Q1 is likely to pan out. Kaustubh Pawaskar of Sharekhan joins us to talk about all that and more. Kaustubh, many of these FMCG companies have seen a good run-up. Even the month of July has been fairly strong so far. The question is, are there enough levers in place, enough fundamental triggers in place to sort of aid strength and aid this kind of revenue visibility to many of these companies? And today HUL numbers will be out as well. So what should investors brace themselves for in terms of Q1 report card, not just for HUL, but for the sector? If you could start with HUL and talk about the big picture as well.
Yeah, hi, good morning, Karunya, and good morning, viewers. To start with HUL, this quarter we are anticipating around 14% growth in revenues, which will be largely a price-led growth. So if we talk about volume growth is expected to be at around 2 to 3%, and this is on a base of 9% volume growth in Q1 FY 2022. So volume growth are expected to be lower, considering the fact that rural slowdown will continue to impact the HUL's volume growth, and also because of the inflation, there has been some kind of a lowering of consumption. So people, consumers have moved to small packs. There is some kind of down trading which has happened at the lower end of the portfolio. So that will have an impact on the volume growth. So volume growth not only for the HUL but for overall industry, we have seen that for last 2 quarters volume growth has been moderating. HUL volume growth has been a little bit higher compared to what the industry growth is, and that is mainly because of the fact that it is continuously gaining market share in 80 to 85% of its portfolio. But to talk about Q1 specifically, we are expecting volume growth to be lower to around 2 to 3%. What revenue growth of around 13 to 14% will be largely driven by the price increases what they have taken predominantly in the home care and personal wash category, where the raw material inflation was high. So significant price increase the company has taken, and it is an industry phenomenon. Not only HUL but other competitors have also increased the prices. So this quarter we are anticipating around 15% revenue growth, largely price-led growth. In terms of margins, gross margins are expected to be lower on YY basis by around 250 to 300 bips, mainly on account of increase in the commodity prices. For HUL, it is largely because of the significant increase in the palm oil prices and the packaging costs and other crude derivatives. For industry as a whole, we have seen a substantial increase in some of the key raw material prices. Right. So that will have an impact on the margins. Though the company has passed it on through the price increases, however, we believe that there will be some kind of lag between price increases undertaken and whatever the inflation, what we have seen in past 3 to 4, in second half of the Q4 and early Q1. So that will have an impact, and most of these companies, they do maintain around 2 to 3 months kind of inventory. So for this quarter, the impact is going to be there on the margins. However, whatever correction we have often seen in the commodity prices, I think the benefit of those correction would start flowing in from maybe quarter 2 or quarter 3 of FY 2023. So, but for this quarter, the margins are anticipated to be lower on YY basis. For HUL, we are expecting around 75 bips decline in the operating margins to get around 23%. For industry as a whole, we are anticipating margins to be lower on YY basis.
Okay. But what happened in the commodity space and the raw material price inflation, it's known to everybody pretty much tracking the FMCG market or FMCG industry or the market at large. But now that the numbers will actually start trickling in and reflecting that pain, do you foresee some pressure or some kind of selling in the FMCG counters, in the latter half of the month, as and when the numbers start trickling in? Because what if, the market is not ready for a massive margin compression, or do you think it's pretty much been factored in, and now that the recovery we're seeing in the stocks is actually something that will stay for the long term?
Yeah, so I believe that the whatever margin pressures what we are anticipating for Q1 are largely factored in the valuation. In fact, for last 15 to 20 days, we have seen recovery in the FMCG pact, and most of the stocks have seen a good run up from their lows what they have hit recently. So I believe that the volatility or the margin pressure for Q1 is largely been factored in. However, we believe that most of the companies will give a cautious kind of outlook, because they would keenly monitor how the raw material price momentum would be in another 2 to 3 months, and then they will take their pricing actions to see recovery in the volume growth. I believe that margin expansion would largely be seen in the second half of the year, but the trajectory is that there is improvement expected in the earning performance in second half of the years, and that is something what Street is also expecting for.
Okay, all right. So who are your picks for this earnings season within the consumption space? Who could be the outperformers?
Yeah, so according to us, the outperformer would be the companies who, who have seen some bit of, reduction in the raw material prices for last 2 to 3 quarters, and they are relatively better off compared to other consumer good companies in Q1. So, for example, Tata Consumer Products, we have seen raw tea prices, declining from second half of FY 2022. So I think that will help Tata Consumer Product to post better margins in Q1 FY23. Also, for example, Marico, we have seen copra prices correcting from their highs in the second half of the year. So these are the companies, who might see a better, margin in quarter one FY23. I would also believe that Asian Paints, because of the base was low in Q1 FY22, and whatever price increase they have taken, considering that the revenue growth would be strong, and even at the bottom line growth, the whatever growth in the top line would get reflected. But obviously the margins are expected to be lower, and also ITC. So if you consider ITC again in the cigarette business, the growth is going to be strong because of the low base. We have seen even the agri business and hotel business, performing well in Q3 and Q4. We believe that that momentum would continue. So again, in Q1, the base effect would be there for the hotel business, where hotel business is expected to be strong. And also in the FMCG business of ITC, we would see some kind of uptick in the categories like stationery and out-of-home consumption categories like juices, snacking products, where the growth was subdued for base quarters. So I think these categories will do well, considering the fact that there is a substantial improvement in the consumption of the out-of-home categories. So ITC, Marico, Tata Consumer Products, Asian Paints, these are the companies I believe would perform well in Q1 FY 2023.
All right, Kaustubh, thanks for joining in. We will definitely keep an eye out on all the names you mentioned and all the big trends that you foresee as far as Q1 numbers are concerned and beyond that. Let's get back once again to talking technicals with Raja Venkatraman. Raja, I wanted to understand which are these consumption stocks that you like right now, going by the technicals.
Yeah. So with regards to the FMCG space, right? Can you just confirm? I lost your audio.
Yeah, I was asking you about consumption names that look attractive on the charts.
Yeah, so the consumption names which are looking attractive on the charts, I would first go with Titan. It had come out with excellent results, and the way it is reacting from lower levels seems to be very interesting. And I would definitely see a nice upside towards 2500 within the next 1 month, because the overall setup is good, the momentum is picking up, and I'm tracking Titan on the charts and also participating in them. And the next stock which I would like to highlight is Tata Consumer. Like Kaustubh also mentioned, it had formed a base, it formed a nice double bottom, and then the breakout which we have seen recently looks to be sustaining, and the momentum is also picking up, because there are a lot of FMCG names that are showing some movement, but they are lacking in the momentum. So I am tracking the names which, along with a recovery which we are seeing in the FMCG space, are also witnessing some participation. And these are the names which I am seeing. And the third stock would be Indigo. So Titan, Tata Consumer and Indigo are the names which I am tracking. They look good for an upside. Tata Consumer can challenge its recent highs around 40. And when you take a look at Indigo, Indigo is just getting started. So you can target a target zone towards 2000 within the next 1 month.
Okay, all right. We're getting a lot of queries, and one of them that I want to highlight is on HDFC Life. Once again, an earnings candidate to watch out for today. Nandish wants your view on this particular script. HDFC Life earnings, well, they're likely to be healthy this time around, but the stock underperformance for the entire insurance pack actually is something that has been ailing the market for some time, ailing investors for some time now. Talk to us about this particular counter, and how do you see things playing out?
Yeah, so when you consider this particular space which they are operating in has been undergoing a lot of issues, especially due to this current pandemic and its fallout. So what has happened is that this particular stock has been impacted quite severely. And if you see over the last 3 months, it has been barely able to move. the pattern continues to showcase that this kind of lackluster momentum will continue, and whatever be the result, it would continue to experience supply. So if you are looking to participate in this stock, I would say you should participate on the downside, not on the upside, because at the moment there is not much of recovery seen.
Okay. All right. Let's see how it reacts once the earnings also, are reported by the company. But let's talk about the next query. Naveen wants your advice on IEX. Last 3-4 weeks, largely a range-bound sort of a trade seen on this particular counter. What lies ahead?
Yeah, so IX has reported some decent numbers, and well, it is gone into an oversold territory. And what we are seeing right now is a good rebound. So if it were to move above yesterday's high, I envisage that you can target. It's going to be a trading scenario, because the prices have come down very sharply. So what you're witnessing is a rebound. So when you're targeting a rebound, initially you got to go with a 1 to 2 day play and see how the trend matures before you start going for a longer term play. That's the advice which I would like to give all the people who are listening to this particular recommendation. The movement could go towards 189, but it's going to be a 2 to 3 day play. The momentum is good. The setup is looking interesting. So there are target zones of 180 to 189, which is on your table. So if there were a positive movement today, despite the market witnessing a possible gap down opening, then this could be definitely a good trade to participate.
Okay. Shakti wants to know if it's a good time to buy Wipro at the current levels. It's very close to that 400 rupees mark, and it has consistently, falling for the last 3-4 months now, and tomorrow is its numbers as well. So tell us, what do you foresee?
Yeah, Wipro, once the entire whichever sector has seen a strong fall, like the IT or the metals, they are giving us a rally, and then they are witnessing some supply. So the point here is that, are you going to participate on an intraday basis? The answer is yes. It's looking to give us a good intraday play. But if you're looking to look at it from a point of investment, I still do not see any kind of signs which tell me that I should go ahead and invest into Wipro at the moment.
Okay, all right. Let's talk about, a trader's favorite and a recent entrant in the markets, Zomato. We keep getting a lot of queries, and today as well I saw a few comments on the section, on the live section. Abhilash wants to know whether to buy, hold or sell Zomato, and very wild and very divergent moves seen in the last 2-3 months on this particular stock. Tell us if it's a good time to buy, hold or sell then.
I would say that Zomato, if you have not participated in it yet, then it's the best time to avoid it. But if you are already holding the stock, then this stock has already given signs that you should exit it. And its recent low of 51 is going to be challenged. There is no point in participating in this stock, because you are expecting a return on your capital, which I don't know how the stock is going to give you, because from as far as my knowledge is concerned, I don't have any kind of positive triggers in this stock. So one should stay away. That's my suggestion.
Okay. Several questions to us have come for Bharat Electronics. There's Aarti, Jayaprakash, and I think one more viewer that I had seen on the live feed. What is your view here? The stock, the street clearly reacted quite well to the earnings report card. But going forward, do you think this is a counter that excites you?
Yeah, definitely. Bharat Electronics is a very promising stock. Yes, it's a very slow mover, but then it does give you some good moves. The vibes in this sector, the defense sector, is quite positive, and this stock is one of the prominent names which are getting featured in all the discussions, and it is getting also reflected in its numbers. Now, when you take a look at the setup, it is making continuous higher lows, which is a clear signal of some positive traction. Yesterday too, it has challenged the highs of 260. And I feel that if it continues in this territory, you can go long. You can use dips towards 240 zone also to buy into in case there is a reaction today. You can look at 240 zone as a buying zone. So overall, it's an outlook to buy. You can look to trade, you can look to invest, but then definitely it's a stock which I would recommend from amongst all the stocks which we have discussed so far.
Okay, great. Then BEL gets a double thumbs up from Raja, it seems. Thank you so much for joining in and for answering so many queries and questions that our viewers had for you as well. That's all we have in this edition of Morning Trade at Moneycontrol. Guys, thank you so much for tuning in. But stay tuned. Markets with Santo and CJ is coming up next.